All right, everyone, welcome back from the episode of Carnivore Trades. Today is Wednesday, October 5th, 2022. If you got done so already, give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, market's set to close here in just under a minute or so. And we are fading a little bit off the highs, and we're going to close above yesterday's high. So it looks like we're going to close red unless we get a big market on close buy program to come in. But to me, the bigger story here is honestly, it's a solid day for the market, all things considered, at least on a short-term basis. We gapped down over 1%. We were down 1.5 on the spiders at about 10:30 this morning. And for us to rally back to the flat line, that's really kind of a victory here for the bulls. Again, I'm not saying I'm bullish here. In fact, a lot of the points I'm going to hit on this video is that I think we're getting very, very close to a high risk period. And, I've been talking about kind of like we're going to have panic soon. I think we're very close to that. The cycle work I've done is starting to get close here. There's a closing bell there. So spiders closing down just 72 cents, 20 basis points, just 5 BP on the triple Qs here. Semiconductors had a nice day, so they kind of led here. But so again, don't get me wrong. I'm not saying this is a bullish development, but immediate short term, you got to give the market a little bit of the benefit of the doubt here. And if you look at the ES, really all you have here is just an inside hammer. And that's not a bearish candle anyway, you slice or dice it. And, really this is a 200-point move here off the low. So we had to pull back here. We had to pause. We had to have some type of a pause or consolidation day here. So that's really all I look at it as. Even though you did close below the highs here, if we look at the actual SPX here, we did close below yesterday's high, and we did close down, 7 points on the SPX, but it's not a big deal. To me, the fact that we tested that gap again and then we rallied back up is a sign of strength here in the near term. I wouldn't rule out a little bit more upside, but we are getting, like I said, we are getting very close to what I think is a major sell zone and a risk period cyclically. So that's essentially what I'm looking for right here. I think that if you're long, if you caught the bottom here, you should be very careful here. Protect your positions. If you are long, take some profits, maybe trim some off the table, trail your stop, do what you got to do. That's what I'm looking to do right here. So I think the next opportunity here is to the short side. And again, that's really kind of been the theme all year long. And again, just to continue to kind of hit the head on this, but the 2-year Treasury it's not indicating any sort of bottom is in. It was red today in a market that had a nice rally off the lows. Told you guys the last couple of days I had a buy signal on the 10-year yield. Got a nice little bid there off that 20 MA. So a 4% move there for the TNX. I did play that to the long side yesterday with members, by the way. So we're in the money nicely. Actually, we played that with TYO, so that's basically a 7 to 10 year Treasury bear. So basically a long yield play, but we're in the money nicely on that position there. Again, bigger point, the bond market's not saying anything spectacular is happening for this market. HYG, you had a pop off the lows, and that's it. It's not like this thing is, if the bottom was in or if the bond market sniffed the bottom, we would be surging, like absolutely surging on these names. The VIX, yeah, it was red today, but not down a lot, not down a lot. Some of the volatility products too, like the VIXY actually was green. So VIXY green, UVXY green as well. I believe VXIM, yeah, VXIM was green as well. So little red flags kind of cropping up here. And again, it's a nice little rally here for the market. Wouldn't rule out a little bit more upside. Again, we could always push up here. Bear market rallies are notoriously fierce, but big picture, we are getting into a pretty good period of risk, which I think will bring us, well, new year-to-date lows, but probably a significant low for the foreseeable future. And I don't mean like years, I mean like months, possibly 6 months or more. That type of a low, I think, can be made here right around, I would say the election, end of October, early November, sometime in that space here. Anyways, let's get over here to the Qs. So we talked about the spiders. Qs down 5 basis points. Again, kind of just an inside day. Let's take a look at the NQ. Again, inside hammer. NQ futures are still green, so they're still holding up okay. Basically kind of just kissing that 20 moving average pretty much on all indices here. You see the diamond there actually got to the 20 moving average. Dow turned green before all the other indices today, so Dow was a little bit of a leader there. Russell 2000 again into that 20 moving average as well, pulling back, down to $1.13, but nothing major here. So all indices just kind of in a pause day here. Russell could still get up to that 178 area. In fact, I think that's probably where it wants to go. And then above that, you've got that 100-day moving average there as well. So those are going to be kind of your resistance zones. Same thing on the Qs. So, we're looking at the same areas on the spiders, right in this, 285, 286 to 292 area. And then for the spiders, it's, really anywhere from 380 to, I would say, 385 is going to be major. Best case scenario, you get up to 390. And then you've got that X marks the spot area right there with that downsloping trend line. I definitely can't rule that out there. It's definitely a point of interest. So that is a possibility as well, but I do think there's a lot of resistance right in that 382, 385 area. So anyway, we mentioned tech, but semiconductors here, again, showing leadership up 1% on the day. So a bullish, you don't see this candle very often where you gap down below a green day and then close green. So it's a bullish engulfing of a previous green day, and closing above the 20 moving average. And you did back off that 202 handle. I do think this can get up to about 208 if we continue to push higher. So that's kind of like the next major resistance level that I've got penciled in for that. But nice move there for the semiconductors. What can you say? Semis are strong. Market generally going to hold up, and that's another reason why I think there could still be a little bit of upside in the cards here, as the semis are a good leading indicator. IGV here up 40 basis points. So again, same deal, kind of that flat, almost open below yesterday's open, but basically flat to yesterday's open, and then an engulfing kind of reversal there for IGV. So IGV also showing a little bit of strength. It'll be interesting to see when it back tests this trend line. You'd have a head and shoulder there, so that will be in play around 273, 275. So that's going to be your area to watch there on the IGV. For Dow transports here, actually red on the day, so down 0.5%. But again, going into that 20 moving average, huge surge off the lows, so it makes sense it has to pause here for a little bit at the very least. And then again, your upside targets again, 13.2, and then this would be your major upside target around 13.5. I don't think it actually gets up there, but that's, those are just the levels there. All right, we talked about rates already, XHB, so we'll go over to home builders. Home builders, again, inside day, nothing really too new to report. Again, the 60, 61 handle is going to be your area to watch there. ITB, same thing, 56, 57, $57, 57.12. The actual level I have penciled in there, but again, inside day, nothing really terrible going on. Maybe this could get up to gap fill at 58. Definitely can't rule that out, but you still have to contend with that 57 level before that. And then VNQ here, again, weakness. This one just continues to show weakness, so down 2% on the day. It did come off the lows, but I mean, that's just a soft move altogether. I mean, you'd think that this would get the rubber band, I mean, from here to here, and even from here to here, I mean, that's a stretched rubber band, right? That should be bouncing up into that gap fill. I mean, I would think that would be able to get to that gap fill today, given how stretched it was. But again, continuing to show weakness, and real estate not in good shape right now. So I know every millennial is very happy to hear that, but home prices don't seem to want to go down either. Just rates go up, so it's just a double FU, I guess. But anyways, VNQ here, down 2%. Let's move over to financials. XLF, down 68 basis points inside day. Again, just like everything else, stalling at that 20 moving average. You get through that, you're going to have your big resistance around 33 bucks. So yeah, that's really it. But nice little pop there for XLF yesterday and an inside day. Broker dealers also an inside hammer, kind of like that ES candle. Broker dealers holding up well, stalling out at that 200 moving average. So they're hanging in there pretty nicely. May have some resistance around 450, and then if it can get up to 460, that would be a little impressive to me. But this has been this has been one of the strongest indexes. So if anything's going to outperform, it's going to be this right now. All right, so let's flip over to let's get into energy here. So crude, a nice little day here, up 1.75% on the day. Again, OPEC production cuts. That's kind of the headline right now. OPEC says that type of stuff all the time. Again, we don't care about the news. We were buying the chart levels, and then the news comes out and it's bullish. So the charts generally tell you beforehand what's going to happen. Anyways, we basically stalled right out here at the 50 moving average on the daily. We'll see if it gets a reaction tomorrow. I don't really have a bias one way or the other at this point. I mean, I'm generally bullish crude, medium to long term. In the short term, it still has to close above 86.68 on a weekly basis. Until you do that, I seriously wouldn't rule out another leg lower into that blue trend line. And if we do get a panic event of some sort in the market, I could definitely see that happening. I do like the fact that a lot of these commodities, specifically the metals, have made nice moves off the lows. But if we do get a panic event in the market, we could see another, push down. So something to keep an eye on. I'm not saying it happens, but these are always, just things we want to consider here. I still have a small crude position, long position in UCO, and nicely in the money, about 15% on that so far. So that's been a nice trade. But honestly, I'm actually rooting for it to get down there because I want to get a bigger position. But in any case, crude having a nice day and a nice little surge off that 74, 70. Well, what did it get down to? 76 there. 76 handled last week. Anyways, XLE. Again, a strong sector today, so back above that trend line, and that's confirmed back above that trend line after today. Trend is back up. We talked about that yesterday, above all 4 major moving averages. This should stall out around 82.50. At the very least, you have a gap fill there, pivot high, and then kind of your sell-off happened right above that. So that's where this would likely stall out. But XLE is holding up really well. XOP also, trend is back up on that, above all 4 major moving averages. And the OIH, nice surge today, up 4.5%, stalling out, at that 200 moving average, but a nice little push there off the lows. So energy in really good shape here. Nat gas, this looks like a confirmed fake breakdown here. So nice move. We'll see if we can get back above that trend line, but that's a nice move there off the lows for nat gas. Again, I don't really have any particular trade on it right now, other than you have this overarching head and shoulder pattern. So you could still make a case that, even if we let's get rid of the lines here. Let's simplify it, right? You could still make a case that this is still inside bar bear flagging. So even though that kind of pennant failed, you could still make a case that this is sideways consolidation from this down move. So again, there's still a chance we get down that 550 handle based off of that pattern. I still think it's got a very good chance of it happening. But if any asset is going to make a failed pattern, make a bearish pattern fail, it's going to be nat gas because it has been extremely resilient all year long. But anyways, nat gas, nice little pop there, up just under 2% today. Dollar index up 1% on the day, back above the 20 moving average. This thing just does not want to go down. And there's another kind of red flag today is the dollar index continuing to move up, continuing to see dips being bought. I still think it ultimately wants to get back to this trend line. And, that would be a beautiful pullback there. If you got back to that trend line, 50 moving average, previous pivot high, that would be a good area. And that will probably cause a reaction in the stock market, a negative reaction. So this would be an area of interest to me on the dollar index. If we get down there, we'll have to see if that coincides with resistance on the spiders. Probably could give us a good sell signal. So just be on watch for that. But dollar index, nice pop today, up 1% on the day. Gold here. Again, inside hammer candle, stalling out at the 50 MA. We said that probably would do that yesterday. Again, you just went up extended. Nice surge off the lows. You're a little overbought short term into a 50 moving average. You're going to expect a little bit of a pullback. You guys also have that pivot high there as well, going back to the 13th. So, gold stalling. Nothing wrong with this. Just pausing here. I like the little stall out. Nothing terrible there. GDX also pulling back as well, down 1.5%. Filling the gap from yesterday. But again, look at that huge surge off the lows. That's like 13-14%, which is a big move for GDX. So no surprise it's got to pull back in a little bit. Silver also correcting. I told you guys last couple of days, don't chase it. And I mean, this got all the way back down to that 20 handle intraday before bouncing back up. So again, we'll just wait on pattern for this, let this develop. Again, if we get a panic in the market, this can come down and, who knows, maybe it makes a higher low. But you don't want to FOMO in right now and chase it and then get, whipped around if the market, has a major sell-off here and things get sold due to margin selling and panic. So anyways, all things considered, nice little pullback day for silver. Same thing with platinum. By the way, take a look at platinum here. You can make a case you've got an inverse right there as well. So there's your shoulder, head, shoulder, and it's kind of inside of this WV pattern that we've been talking about, right? So if that can break, and that could be a weekly pattern too. Yeah, that's certainly, it's tight, but that's definitely a possible weekly pattern. So we'll watch that on Friday's close. If you trigger that, this can really take off to the upside. So that's definitely going to be something I'm watching there on platinum. Palladium, just as, almost spoken into existence yesterday, but, ended up being a fake breakout. It did pull back in, but we'll continue to watch this one. If it can get above that on a weekly close, then it has some pretty good upside, I would think. Copper here. Another nice day for copper, up 1.6% there on the day, and starting to peak above this channel and that 50 moving average. So we'll see if it can confirm that tomorrow. But a nice little pop there on copper. Wouldn't rule out maybe one more pullback, a higher low before it can break that channel, but a nice move there for copper. So we'll give it the upside bias here for the time being. All right, then lastly, Bitcoin. So, Bitcoin not really doing much here. This is kind of like, this is almost like the most boring breakout ever, right? So we had that nice pop yesterday above this big trend line, and you'd think that, a trend line this major, you'd have like an impulsive big, fireworks going off type breakout, but nothing really happening there. So inside hammer, just like a lot of things today. Same thing with Ether, little inside hammer. Again, we're watching that white trend line there. But we'll see what this does. We'll give it the upside bias for now, as it is above that trend line, but no confirmation yet. If you do confirm, again, I think this can get up to 22.5, maybe 23,000 pretty quickly. So we'll continue to watch that there for Bitcoin futures, but for right now, a little bit of an underwhelming kind of move there, considering the size of that trend line. All right, back over to the spiders here. So again, down 23 basis points today. We gapped down, we recovered off the lows. Ultimately, it's an inside day. Big picture, we are into what I think is a period of a lot of major risk coming up soon. That said, can't rule out a little bit more upside. The market was oversold here, and a lot of those late bears need to get punished, and that's kind of like the rhetoric that I was saying last week. A lot of these people who are shorting the lows are probably going to get their heads ripped off, and that's just the nature of the market. That's how it works, and that's how things tend to play out. But anyways, guys, going to wrap it up here. You guys take care. Come find me on carnivoretrades.com. I'll talk to you guys all tomorrow.